which is a day early. I guess we could look at the schedule here. Oh, by the way, so I had put this announcement out about the accounting club speaker. Apparently, this was supposed to be what day? So, tomorrow. Apparently, Rob Sand has had to reschedule, so they're going to look at doing this early in the spring semester. So we'll put that announcement out when the time comes. FYI. Okay, so I had originally scheduled for today and Thursday to finishing up chapter 5. I think we can get chapter 5 finished up today, which gives us an extra day to work on chapter 6, which is good because we only had like 3 days scheduled, as well as trying to fit in reviewing for that comprehensive exam and also the final exam. So that gives us a little bit of breathing room there. Now you'll notice as well that I have not scheduled anything for the 21st, which is next Tuesday, which is because it's Thanksgiving week. I will be here, okay? I will be here, I will be in class. I will not be taking attendance that day, but if you want to use that time to come in and work on homework or have any questions or anything like that, feel free to do so, okay? So, like I said, I will not be taking attendance that day, so it's kind of a freebie for you. I know a lot of people travel that week, so it gives you a little bit of breathing room. And since the homework is due the Thursday night, this gives you some time in class as well to maybe work on that, so you're not doing it Thanksgiving night while you're digesting your turkey. Okay? Any questions? Nope. All right. So let's continue on here, talking about chapter 5. Let me put the schedule up for today. So we're going to talk, today we're going to look at that Form 940. I know we kind of did a little bit on it, I think, I recall, late last week. And we'll look at that Schedule A as well. I want to, we'll take a look at the form. I also have some time scheduled in here to go through maybe 1 or 2 of your homework problems that involves the 940 so that you know how to fill that out. And we'll also talk about the schedule for deposits, which again, I kind of gave you a little bit of a preview of last Thursday, how that all works. And yeah, we already talked about the Iowa form as well. I remember I pulled that one up last week also, so not a whole lot actually to talk about, additional to talk about there. I do want to, in addition to doing those homework problems, I also just kind of want to go over again the whole credit reduction rules, because I know that's an area where a lot of students get kind of caught up on understanding that. I know there's a question on the assessment that involves the credit reduction and with FUTA, and that's one area where a lot of students looking at historical data have had some issues. So I just want to kind of spend a little bit of time going over that again to reiterate. Any questions today? Okay. Alrighty then. Let's see. I thought I had these pulled up. Do I have them pulled up? Yes, I do. All right. So, talk a little bit about the due dates for the FUTA return before we take a look at the details of it. It is due by January 31st of the following year, so all of the information is collected over the calendar year, January to December, and then that is reported on the Form 940, and which is submitted by January 31st. Now, if all deposits that were required to be made have been made, they give you a grace period of 10 days in order to do that. Anything later than that, you can expect some penalties and possibly interest as well to accrue by the IRS. So again, that Schedule A, which we took a quick look at, but we'll look at it again. Schedule A is an attachment to the Form 940, and it is used for multi-state employers as well as for employers that are subject to that credit reduction. Those are the only times you're really going to use that Schedule A. However, if you're in one state and you're not subject to a credit reduction, then you wouldn't have to use that Schedule A. Now, as far as the address, they talk about where it's filed. The IRS always lets you know, and the addresses for the IRS change as well, so, oftentimes from year to year. So that's one of those areas where when you're filing an IRS form, it's always good to make sure, even you may not be sending it to the same location that you sent it the year before. So it's always good to double check on the address for any type of IRS return. And maybe if you've filed your own taxes, of course nobody really mails them in anymore. But in the olden days, when they would mail them in, you'd see that, oh, this year I'm sending them to Texas. The next year I'm sending them to Kansas City. So they would go to different IRS locations. But just a good idea to make sure you've got the right address there. What did I do? There can be an extension of the time to file the return, but you have to get special permission in order to do that. It's always possible that you may make a mistake on filing the 940, which requires a correction. When that happens, and this is again true of pretty much every tax form, you would have to submit what's called an amended return, where you are making those corrections. Now with the 940, there is no specific amended return. There are some returns that they have printed up, they've put together the actual amended return that gets filed. For the 940, that is not the case. You simply write on top of it that it's an amended return, and then you would include an explanation as to why it was being amended. Now, chances are, if you made a mistake on 941s during the year, and you have already filed your 940, chances are you're probably going to have to file an amended 941 or multiple ones if you happen to make a mistake early in the year. And you would have to file an amended 940. Also very possible that you'd have to file an amended W-2 for the employee where there was a mistake, as well as an amended W-3. So there's kind of a snowball effect when those mistakes are made with regard to payroll taxes. Okay. All right, so when a company terminates, when they cease to do business, they do still have to file a final return. And there's a place on there, let me just pull up the 940 right now. So it looks like we've got the 2022 one here. So you can see there's some boxes up here that can be checked if there's something unusual about the return. If it's an amended return, this would be checked here, indicating to the IRS that it is amended. Successor employer, so that would be where maybe a company has bought another business, but they've got a new employer identification number, but you've got the same employees. So you've got to continue on with the information from those employees. If you say you bought a company on July 1st, right, you've got to transfer all that information then from that old company to the new company. So that would be a successor employer under those circumstances. If you didn't make any payments, you still have employees, but you didn't make any payments to them during the year, there's a box for that. And then if the business closed or stopped paying wages altogether, then that fourth box would be checked. And those, again, that's just to let the IRS know, okay, you shouldn't expect to receive another 940 for this particular business. There are ways to electronically file that Form 940, believe it or not, there are still forms that are not being filed electronically to the IRS, and especially with smaller employers. You'd think that all of that stuff would be online now, but not necessarily. The 940, you can file it online. You have to get special, it's kind of there's a whole application procedure that has to happen in order to file those forms electronically. The 941s as well can be filed electronically, but again, there's a whole special application procedure that has to be done through the IRS in order to do that. Okay, so we will take a look in detail at these different parts of the Form 940. Let me pull it up here, which I know we did go through a lot of this. I think we did on Thursday. So all the identifying information up here, and it looks very similar to the Form 941, right? Should look pretty familiar. Same sort of layout. So first, part one, they want to know if you had to pay state unemployment tax in only one state, what was the state and what is the state abbreviation? There's always a list of abbreviations for the states. Most people know those anyway, but so for Iowa, IA would be listed there, but that's only if you only had employees in one state. If you had multiple states, then you're not going to fill that out. You would check this box 1B. If you had to pay state unemployment tax in more than one state, you are a multi-state employer. Check this box, fill out Schedule A. If you paid wages in a state that is subject to credit reduction as well. So even if it's only one state, if that state happens to be a state where there's a credit reduction, you would check box 2 here, and again, you have to fill out Schedule A. So, total payments to all employees. So this would be total payments before we've taken into account that wage base of $7,000. So one employee, they made $30,000, you're gonna put $30,000 there. Now we know that not all $30,000 is going to be subject to FUTA tax. Only the first $7,000 is going to be, but we wanna put all of that is going to be calculated down here. The amounts that we're going to extract then that are over and above the $7,000. So total payments to all employees here. Payments exempt from FUTA tax. So if we've got some fringe benefits, some pre-tax deductions that were taken out of the amounts on line 3 that are not subject to FUTA tax, we would put the total amount of those here. So you can guess we're going to be subtracting that from the total before we do our calculation as well of what that tax is. And there's some boxes here that we can indicate what type of fringe benefit that is, what type of pre-tax benefit that is. Total payments made to each employee in excess of $7,000. Be careful there. So it's not the first $7,000, it's everything after it that you have to include on line 5. And then they give you the calculation to determine what the taxable FUTA wages are. We'll take line 4, the payments that were exempt, plus line 5, and the total amount of exempt wages would be listed here. Line 7, our total FUTA taxable wages, all we're doing is subtracting that line 6 from line 3, the total wages, in order to get what is taxable. And then we have our FUTA tax before adjustments, and you'll see the decimal point 006. So they're calculating it based on the 0.6%, not the 6%, because remember, if you have to fill out Schedule A, you're not going to be subject to this, and this is going to be different here. So determine your adjustments in part 3. If all of the taxable FUTA wages that you paid were excluded from state unemployment tax. Now, so if you did not have to pay state unemployment tax, that also affects the tax rate for FUTA. So multiply line 7 by 0.054, so that's your credit reduction right there that's being taken away. And then it says to go on to line 12. If some of the taxable food and wages you paid were excluded from state unemployment tax, or you paid any state unemployment tax late, again, that means you're going to have that credit reduced. So you're going to be paying more in taxes. So if you happen to live in a state where, I think everybody's got some sort of state unemployment tax, but if you didn't have any wages that were subject to state unemployment tax, then your FUTA rate goes up to the 6%. Okay. Part 4, determine your FUTA tax and balance due or overpayment. So total FUTA tax after adjustments, we're going to take lines 8, that was the initial calculation, plus the amount that was subject to credit reduction because we had wages that were not subject to state unemployment tax, and the reduction of the credit reduction portion of those wages that were, how do I want to say this? So those wages where we paid the state unemployment tax late, right? So late payments on line 10, we didn't pay a state unemployment tax, that credit reduction portion there, and then all of those amounts together will be the FUTA tax that we are subject to. FUTA tax, and then we've got line 13, how much did you deposit? So we've calculated how much we owe. Line 13, this is where we reconcile the two, how much was deposited, including any overpayment applied from a prior year. So if you had an overpayment, you could have carried that over to this year if you wanted to do that. So balance due, if you didn't pay enough in, then you will have a balance due. Also, if the balance due is more than $500, you must deposit your tax. If it's less than $500, you can pay it with this return. So they're telling you should have, if it was over 500, you should have already made those deposits, minus anything that's due in the fourth quarter, right? If it was less, then you can go ahead and pay it with this return. If the amount that you paid was more than what you're due, then there is an overpayment, and you get a choice of either applying it to the next return for next year or sending a refund. Is that it's, for accounting purposes, it's less complicated to just get the refund than it is to try and apply it to the next year. Kind of messes things up a little bit. It's not impossible, obviously, but I'm not a financial accountant, so to me it was always it was a little bit overwhelming when that was the case, trying to figure out how to fix the accounting on that. But for those of you who are financially inclined, that might not be such an issue. All right, so here they want to know how much was your FUTA tax liability for each quarter. So, again, they want to know what you were due, not what you actually paid during the year. So it's from this that they're gonna look and see if you didn't pay enough for one particular quarter, then they'll probably assess a penalty and maybe some interest. All of this, the liability must equal line 12, the total FUTA tax after adjustments. Okay, so on here is the tax liability, not the wages that were paid. Okay, so that's just like that, the 941. Remember, we had that that section on the second page. It's the second page. They've moved it around. It used to be the second page of that 941, where we had each quarter what the liability was. So this is the same sort of concept, right? And then signature part. Third party designee, so this is if somebody else, somebody aside from the authorized person is you're giving them permission to speak to the IRS on your behalf, you would fill this out, they would fill this out, and then they have to choose a personal identification number so that when they call into the IRS, they would give that information to say that they are a personal, a third party designee, which may be different from the paid preparer. Right? Signature of an authorized person, their name and title, and then this section for the paid preparer. So there's pay preparer's name, signature. This P10 is a preparer tax ID number. Everybody who is, you have to apply for those. If you are authorized to file tax returns and charge a fee for it, then you have to obtain one of these P10 numbers from the IRS. And it's kind of, it's an annual thing. It's the same number every year, but it's something that has to be renewed on an annual basis. And that's what that is, which is separate from the EIN. So that's the employer identification number for the firm, or it could be your social security number as well, if you're a sole proprietor, with regard to the preparer there. And then we've got the 940V payment here. This is our voucher. Anytime you see a V at the end of a form number for the IRS, that means it's a voucher. It's a payment voucher. Some sort of payment is going to go with it. The amount of the payment listed there, as well as the identifying information of the firm that is filing the form. Okay. If they have any. And then some specific information about how to make those payments as well. All right. So just kind of a general overview there of that Form 940. They do mention here, so who can sign it? If it's a sole proprietorship, then the owner of that business can be the signer. Principal officer can be signed if it's a corporation. So it all depends on how the company is organized. Duly authorized member can sign if it's a partnership or an unincorporated organization, or if it's a trust or estate, which is possible. It's possible for trusts and estates to actually have employees as well. Then the fiduciary has to sign it, whoever's in charge of that trust or estate. Okay, questions about the 941? I'll pull that up again when we go through the problem in the homework, and it'll become a little bit more clear. But any questions at this point? All right, so deposits. As I had mentioned before, you only have to make the deposit once a year at the time that you file the Form 940, unless you accrue a liability of $500 or more. Or actually over $500. Once you reach that $500 mark, then you got to start making payments on a quarterly basis. So if you reach that during the first quarter, then you've got to make that first payment by the last day of the following month. So April 30th, we'll pretend, first quarter we accrued $600 of FUTA tax liability. That means by April 30th, we've got to pay that $600. And we're going to have to continue paying every quarter because we reached that $500 mark. If we reach the $500 mark in the second quarter, then that first quarter we don't have to pay anything. But the second quarter, we've got to pay everything that we owe up for the year to date at that point. Okay? So if it never gets over 500, then you could pay it at the end of the year, and you use that Form 940V in order to make that payment. Questions? All right, so we did go over this last part here, these information reports. These are the pseudo reports. I did pull up that form for Iowa last week. We took a look at that and how that is set up. They're called contribution reports. And if you recall, we had information, there was summary information on the first page, but then there's also a listing of each individual employee, what their wages were for that quarter, as well as the amount of taxable wages for each employee for that quarter. So there's a lot of detail. You can see the FUTA form doesn't ask you for per employee information. It just wants general information about the firm as a whole. The SUTA information, however, is very detailed. And those are, at least for Iowa, those are always due on a quarterly basis. There's no minimum amount that you have to reach before you make payments. You have to pay every single quarter for Iowa. So a lot more record keeping and administrative type responsibilities with regard to SUTA reports than there are for the FUTA reports. Let's see. Those SUTA reports also provide information. If you recall, we looked at there were some check boxes there about whether if there was a reduction in employees during the quarter, what was the reason for that. That also gives a lot of statistical data to the state with regard to the status of employment within the state. So it's not just SUTA information, but other types of information as well. Let's see. So record retention, of course, we've got to retain those records. I don't know what the rules are in Iowa. I'd say at least 3 years, but I'd have to look up exactly what the requirements are. But the employer, as long as the employee is employed, they have to maintain those records, certainly showing the date of hire, separation, and rehire if that's the case, as well as the hours and dates worked and payment dates. So that employee earnings record and the payroll register would have all of that information on it, right? It would already be there with those particular types of records. Again, penalties for failure to file, late payment, late filing, all sorts of infractions. You can expect to have penalties assessed on those. Let's see. All right. Any questions before we take a look at one of these homework problems? And if you guys have any homework problems that you want to look at as well, I'm happy to go through those. Okay. So let's